how we will use the EDM. First of all, it's not electronic DJ music, right? It's definitely just music to my eyes. And that will help us big time with identifying continuation trades. Because again, as you saw, for example, the retail heaven, just having a trading market. And again, we technically sitting out there a little bit, and we don't need to do that. So of course, we have continuation trades as well, and we will do it with the equilibrium diversion mitigation. So what is going on here? So pretty much, equilibrium diversion mitigation means it is a way to trick momentum traders in going in the wrong direction, which we use to our advantage, of course. So mostly used for trend continuation trade, entry confirmation. So obviously it's a continuation trade. The LIT is some sort of reversal trade, but the EDM is some sort of continuation trade. So for shorts, we look at the entry helper for make higher highs while the price is making low lows and vice versa. So it's a switched up divergent type of thing. Of course, we don't reach divergent in any means. So like I think retailers call this stuff like hidden diversion for whatever reason, right? So again, it's a characteristic if again, same thing, you have a break of structure here, makes your imbalances in here, which you usually would be interested anyways. But again, now you can combine it and make it even way more strong with some sort of this divergent type of thing, right? So of course, it's a continuation. A normal diversion is obviously the other shape, right? Like a normal retail diversion is like whatever this, and the other thing makes like this, right? And then you're looking whatever, some random nonsense like this. But if you look for continuation trades like this, and we will combine it with mitigation. It is so powerful again, probably underestimated right now, but you will see how good it actually is. So for the shorts, if it look like this, you have your structure point, after break of structure, leaves imbalances, comes back, retaps it into the EDM, right? So you have your EDM, your equilibrium divergent mitigation, needs to mitigate and then goes lower. It's a continuation trade. So it's not a divergent by any means in terms of like how retailers use it. That's like the normal retailer divergent. Don't get confused by that. And we look at this, it's a continuation trade. Okay, so again, we look for imbalances, and that's how we trade in line with the order flow. Only if it gives an EDM as well. Because again, if it's hard to just follow the proper order flow, because again, you would never know when it fails or it works. So that's why we put in the entry helper to give us way more confluences to see, okay, this is a continuation trade now, and that's where I trade in the mitigation as well. Okay. So LIT is more the first mitigation. Yeah, EDM is like later. We even give you a proper curriculum for doing so, and the whole thing will make sense like in a bit, so no worries. So what we're going to do, we add the equilibrium line on it as well to make it even more efficient. For example, you have your mitigation areas in here, your imbalance areas. It forms an EDM plus a LIT, and then the whole thing is just very, very accurate. We will be surprised once again. Okay. So what we will going to do, we will not look at stuff like this. Of course, if you have like 15 million price action in between, and this point and this point becomes like an EDM, that's nothing we would look for, right? So that's not going to work in here. We're looking for clean pullback. So only 1, 2, take this point in here. If there's an imbalance, again, it needs to have an imbalance as it's a mitigation, equilibrium mitigation diversion, whatever, right? So guess what? It needs to have a mitigation and only fires in once it's a EDM, and then you can take the continuation trade. So same thing. If it looks like this, awesome. Okay, so you definitely take that. How does it look on the charts though? It will look something like this. You have your Asia inducement here, right? False reaction, channeling upwards, build up, minor inducement of Asia, finally medium inducement, break of structures in here, mitigates in here, trading away from the inducement, right? So where would be technically entry opportunities if this is your break of structure, looking for the decisional above here, right? Never taps in there. How would you know? At this point in here, you're just looking at entry helper, makes it sense after break of structure, retaps the whole thing, fires the EDM, what else? Fires a LIT, you're taking this short in here, stop goes above here. Choop into London Asia session low. Guess what happens after? This is also like minor inducement. Of course, like on a bigger picture, it's a break of structure, right? So guess what? comes back. What does it do? Same thing over again. This point and this point. Higher than this point and this point. And trading the order flow. You're taking this short and putting a stop above here. Continues lower. Okay. Makes sense? That's how you easily trade in line with the order flow. Otherwise, you just don't know. Like, how would you know that this is a point you're actually looking for? EDM locks it in. Same thing with here. Locks it in. It's just a continuation trade after you're done with like the normal play. Keeps you out of a lot of trouble. Okay. Also like this. How will you know that this is not your final inducement? It will help as an anti-confluence as well. So let's say this is your New York trap time in here. Why would you know the price continues higher? Of course, like to the left will give you one good reason. But what else? The entry up in here. You have this point, you have this point. Mitigation of this point. Also being an EDM. So price continues higher. So it will help you to not pick this false reversal trades all the time and think like, oh, it goes higher, it goes higher, it goes higher, or lower, lower, lower. No. Again, if you just look at the entry helper, it will give you an anti-confluence to not look at a reversal trade, but a continuation trade instead. Okay. Just look at the chat. This makes sense. Awesome. So what do we have? Again, trade management, how we doing it. We need a break of structure. We need already price in our direction. We need an imbalance. And only then, again, if it's properly filling the imbalance, if it's an EDM all's well, then we can consider it as a final confluence of event, and then we can take the trade. So we start just stacking confluences of events once more, right? Because price action might be clear, but to have even additional confluences is, of course, better. Okay, so that's for the longs. And that's for the shorts. You're waiting for a break of structure, looking for your imbalances. It makes a new low, low, comes back. This point is higher than this one. This one is lower than this one. Creates the ED, but then you need the mitigation. You have your mitigation, so you have combination of things. Confluences stack up each other. Stop loss goes above here. Entry is here. Trading the continuation. Okay. So this is how, again, how it looks on if you should not take it, because again, if this is an EDM in here, what is going on here? It's and technically an EDM, but if you enter it here, your stop goes all the way down here. That's not what you want. That's way too big, and we not consider this as an EDM, right? It's way too big. Of course, it gives us confluences that maybe price goes higher, but we're not interested in trading this by any means. Okay, because it's a one-to-one risk reward. What we don't want that shit, of course not. But again, if it goes lower than here and then forms an EDM, we have like whatever 5 pip stop, whatever, but a 20 pip up move at least. Then we're looking at out of a continuation trade of just a 4N risk reward, which is not bad and it's very clean to take. So how does it work? For example, if you look at this just on a raw price action, how would you know the price goes up or lower? You would not know, but again, if you're just adding in the entry helper, what do you have out of a sudden? You're having the imbalance, and here gets mitigated, and you have a huge EDM. So instead of looking for a random reversal trade in here and getting smoked, you're just looking at entry helper and see, oh shit, this is a huge EDM mitigated, but that zone is way too big. So what do? You break it down to the 1 minute, there's your imbalance, maybe there's a 1 minute break of structures, right? And you're just trading the mitigation of this in here, huge EDM for continuation trades. That's how we trade this retailer stuff in our advantage. Choop. I know it's always at the beginning like, what the fuck, we're trading indicators and shit. I'm not a fan of it, but again, it's it's very smart to use it. Promise you that. Look like this, right?
Got a question, Reen.
Sure.
So, when you're entering like an EDM, right, and you're looking at the entry helper, does it draw out that line for you? It only draws those two lines, right? The price line and the liquidity line, right?
Which line?
Really? Where it goes the divergent line that you have drawn right there. You drew that yourself.
This one. Yeah. You need to draw this line yourself, of course.
Okay. I see. And it goes the opposite way of...
Yeah. So you see, for example, here, what do we have? Again, same thing. We have this channel downwards, right? Then, of course, momentum to the upside, minor inducement, equal lows created. Again, what do you have? Inducement of vector candles into London session. Awesome. So first of all, the imbalance fill in here after break of structure. So cycle is done. Now you're looking for continuation trades until what? Until London is obviously induced, because of course the whole cycle needs to be completed downwards. So now you're looking for, of course, re-entries, or if you miss that trade, of course you're looking for entries. You need to get in at some point. Again, you don't wait for it here. You just wait until the entry helper gives you like whatever signs that price could be ready. Let me just mute. Sean, can you please mute? Awesome. Thank you. There you go. So, for example, price is done. Now we're having our break of structure in here. Awesome. So again, technically we're looking for the decisional or the extreme. So what are we going to do? We're just looking at the entry helper and see, oh shit, this point in here is like a valid pullback before it broke this structure point. So this technically led to the break of this point. So this is already a point we would be interested in, but that alone is not enough. Now we have the whole cycle coming from before completed, and also the break of structure with this inducement above here, internal break of structures, mitigation of this one in here, push downwards. This push led to the break of structure. Finally, price comes back. What does it do? It gives an LIT and an EDM. Okay, did you see that?
EDMs are like way more likely to be market executions, right? Because I don't see how you could do a limit with that.
Yeah, you can do both. You can switch it. At this point, you can switch it to the 1 minute and trade again the same thing, reaction in here, and then stop goes above here.
All right.
Okay, but of course we will show you how to trade them. Just understand the picture though. You see, like, of course, like how would you know the price reacts here and does not go here? Right? You would know no. But now you know. Now you know that this is an EDM. It's fired with a LIT and an EDM. It's a combination of both. So guess what happens? Market tubes it. Right? So guess what? Now you think like, okay, so maybe this is my inducement. I expect this, whatever. Okay. Just by looking at this, good guess, but guess what? Price comes back, gives the imbalance here, mitigates the imbalance. What is it? Price point here, price point here, price point here, price point here, gives the EDM, mitigates the imbalance. So guess what? It will continue lower. And that's what it does. Okay. So what noticed you else though? So is there anything you noticed as well in this whole day in here? What is going on here? Did you notice anything else? Just looking at this intraday play. Let's test your skills at this point. Any guesses? Okay, there you go.
There's a whole bunch of trend lines and liquidity.
Like what else? Nobody got it right. Only one. If you look at this whole day, what else is going on here? Just what stuff you know already. Not what should happen next, but what already happened. Like, is there something you know already, which you could make sense about this whole day in here, other than whatever? Okay. So let me bring some light into the darkness here. What do we have? We have minor inducement, London trap, to the minute, internal break of structure, mitigation. We have our minor inducement, which is the break of structure in here. Trade to let EDM. Right, we trade the New York trap reversal into London close. What should London close do? Mitigate their position. So we're having, at this point, we have so many components. We have London close, we have internal break of structure, we have EDMs, we have mitigation, we have timing confirmed. We're trading away from the medium inducement. Of course, you're trading lower. They want to mitigate their positions out of it. Right, so guess what? It's not exactly what we showed you earlier, like a typical cycle. Right, but guess what you do now? Just, this is, look at it, like, what? That's our drawing, that's what price action looks like. But what we do now, we're just adding on top of that, like EDMs and LITs, to make the whole thing even more accurate. So out of a sudden, you even know that this London close trade, for example, is also an EDM, so you're stacking confluences of events. Okay, it's more and more and more. The whole cycle starts to get crystal clean. Make sense?
Reem, quick question.
Yeah.
It's not 100% clear to me how to read the EDM. So it's nothing to do with the equilibrium line, right? It's about the fact that there are two lines diverging in the opposite direction. I don't fully understand how to read it.
No, so like, okay, so you know, like a retail divergence is like if price actually makes this and then like this, right? But there, whatever RSI or whatever they're using, let's say it did make like here, like you see lower lows, lower highs.
Yeah.
So that's the indicator, and that's price. Oh, what I might do it be, you know what I mean? Price, right? So of course they now think, okay, whatever momentum lose track, so price will reverse. That's what they think, right? But we don't do that because we don't predict price randomly. We look at it. It's like, it doesn't even make sense. So we want to look for continuations. And for us, if again, we have like a trap, break of structure, now making a higher high, having an imbalance in here, price comes back, coming to this imbalance zone in here. Let me remove that quick. And now our entry helper will show something like here, and then like this, right? You're expecting, okay, this point to this point in here is our EDM, because now it mitigates a zone we're already interested in, plus it is this type of divergence. You see the difference? Like this low is lower than this one, but this low is higher than this one.
Mm-hmm.
You see the difference here? Like here, same thing. This point in here is higher than this point, but again, the entry helper says, okay, momentum got switched to the upside, so they're trapping in momentum traders. What does it do? Doing a LIT and creating the EDM while mitigating these areas in here. Same thing in here. They're pushing price upwards, trapping momentum traders into the long side. In reality, they're just going to the mitigation. Timing comes in, London close. They want to mitigate their positions out of the trades. Anyways, fires the EDM, mitigating, and then it goes lower. It's just an additional confluence. Does it make sense?
Yeah.
Again, EDM is like here. You have this point, and entry helper, just to make it extreme, should be like this. Okay, so you have this low, this higher low, but the entry helper is this and this. Make sense? Yeah, and it can be confusing at the beginning, I completely agree, but we just need to show you what it is first until we show you how we use it, if that makes sense. So it's hard to show how to use it if you don't understand like what it is. So that's why we need to show you like very random examples first in order to get you to how you use it. But do you understand the concepts for both of them? Like what a LIT is and what an EDM is? Again, LIT, if it touches here, goes lower, and EDM, it's like this, right? Does this make sense to everyone in here? If someone is here which not getting sense out of that, please speak up, because it's important, because we need to move forward of that.
Can I ask a quick question?
Sure.
It makes sense, but in the situation where I don't think I can annotate, right? Can I?
No, unfortunately not, I think.
Oh, can you see it?
Oh yeah, I can.
Oh, okay, cool. Real fast. In the situation where you have like this push down, if you were looking at this possibly as like a decisional, and you were looking to take an entry off this, because at the bottom, when it came back in this area, you have the tap into the into the LIT. Would that just be a situation where it's like, you know, you just take a loss?
There's no LIT. The LIT.
I'm sorry, because like when it first taps into it, like before it breaks above, I would be looking for like an entry in there.
Yeah, so if you can see, this candle in here is the highest one, and this is the highest price of points. So when it tapped into the price, already was way above.
Oh, okay, gotcha.
I see your point. If price actually, yeah, I get your point on the edge, but yeah, it did not do that. You even see like this candle actually was this one. You can see it in here because hard to track, but you can see the difference of here and this one. So that's two candles in here, and the last candle, which was in here, this candle in here was already way above that. And the last candle just smoked completely through. Okay, no problem. So let me just see. So, okay, so the main difference is definitely not only the divergent thing, right? So again, the EDM doesn't need to be in LIT as well. So that the EDM can be in LIT, but the EDM does not need to be in LIT. So let's say this is your equilibrium line, but the EDM is like, let me get another color, like here, right? Like this, right? It can be like this as well. And price is obviously should look like something like here and then here. You see, it's not a LIT by any means, but this is your mitigation in here, coming from a downtrend, and you're just trading the continuation with the order flow with the mitigation. Okay, and this just confirms it because it's also an EDM. And again, it just helps you a lot by identifying the right order flow, which order flow you should take and which order flow you should not take. Okay, but again, look at price first, and if it makes sense, oh yeah, I have an imbalance here. Okay, awesome. Okay, I have London close here. Awesome. So what should London close do? Oh, mitigate. Okay, what else? Do I have a break of structured low side? Yeah, awesome. So should I look for more downside action? Awesome. Yeah. So should I look to more target lower? Awesome. And then, oh shit. And it's also an EDM. Oh, I have so many confluences now. Let me take this trade. That's how you should do it. Like, not randomly look at the chart and like, oh, whatever. Oh, that's an EDM in here. Oh, why? Why would it make an EDM here? Like, no. This is confirmed by time, price, mitigation, everything, right? Structure, daily cycle, everything. And then it's additional on that, it's an EDM. Right? It's an additional. It's not like the reason we take the trade, it's the final confluence to make it more clear for you.